Saurabh Mukherjee of Marcellus with that perspective. 40 points now on the Nifty. We're at 18,660 at this point in time. Now, a Prestige Estate stock has been under pressure. It is down 16% from its 52-week high. But sales, demand, etc. are doing very, very well. Interest rates at the margin, though, are something one needs to be watchful of. We have Irfan Razack, CMD at Prestige Group, joining us to take some questions. Mr. Razack, good morning. Great to have you back on the show. Appreciate your time. Prashant this side. We had the DLF management 2 days back with us, and we were talking about this interest rates issue. And I asked, Mr. Tyagi of DLF, at what point of interest rates, home loan rates, does it start to hurt? It starts to keep away buyers, makes them rethink the decision to buy. Is it till about 8.5%? Things are okay. But once you start to creep higher to about closer to 9%, that starts to hurt a little bit. Would you agree with that? Because we are broadly right now in the 8.5% regime.
Morning, Prashant. Yes, interest rates going up is a concern because it's also a matter of affordability and how much a person buying a home can afford to borrow. And it's a function of how much EMI that needs to be paid month on month. Obviously, at the moment, we are at sort of a good level. And if it goes up more than 9, it's definitely going to hurt. But I don't think it will. I believe that after a point of time, it will also stabilize and it should also come down. So that's my prediction. However, having said that, people are committing to buy homes. I think that's a function of, the amount of surplus that people have and the jobs that are paying them. And people are committing themselves. And they are buying homes. And again, having said that, there are different segments. Now, if you take the mid-income segment, that is where a lot of trading is happening. And having said that, there is also trading happening in the high end and the luxury segment. So you really can't pinpoint. It keeps changing, but the stable market would be the mid segment where we keep on getting the volumes as we go along.
Mr. Razack, morning. Did you participate in the Dharavi redevelopment bid? Adani won it. And what stopped you from being aggressive?
No, we did not, because we are still infant in the Mumbai market, and we don't want to go crashing in there. We are trading ourselves softly in Mumbai. Having said that, we are got a lot of work in Mumbai, but we are doing things in a measured way, and we definitely don't want to get ourselves into something that is too much to handle.
Hi, Mr. Razack. Good morning. Well, you didn't bid for that one, but redevelopment as a theme, it's come back. After a while, I'm seeing so much of redevelopment, in the area that I live in, that's in Mumbai. What's your, sense on that space? Does it offer a lot of potential? And as a percentage of your business, will redevelopment have some part of, if you could give us a percentage out there?
Yes, see, Mumbai being Mumbai, where there's a shortage of land, the only way to get raw material, which is land, is redevelopment. And there are many societies which have become old-aged over a period of time. And this is the opportunity. There are many, many redevelopment proposals that keep coming to us on a daily basis. We have to evaluate it on a one-to-one basis. Actually, we are already doing a few of the redevelopments. And it's working, but it's a long process. It takes its own time. But if you do it properly and succeed, for me, it's all about delivery. Today, I've started the journey. Now, the question is, you have to get to the destination, that is, give delivery to the customers. Moments that delivery happens in a few projects, that means the confidence comes in, confidence amongst the investors, buyers, as well as in our internal team. And then there's no looking back.
Could you give us a sense of the hotel business? What are the kind of occupancies in Q2 and even now in the month of October as well as November? Has it picked up further?
Yes, hospitality and retail both have really kicked in, and hospitality is really doing well. It's actually exceeded the 2019 levels, pre-COVID levels. And there is a huge traction, and the occupancies have gone up big time. And we are running above 70-80% occupancies, which is really amazing. And we believe that this strong momentum will continue for some more time, unless there's some other blip. But as of today, the hospitality is rocking.
You all were exploring a REIT option, right? By when will you all be coming to the market with that?
Any REIT, whether it's a hospitality assets or retail or even office, we need to create scale.
Okay.
Now, already we've hived off a certain amount of assets to Blackstone in 2020-21. Now we are building a lot more assets. In fact, one of the first big asset that will be opening its doors to public tomorrow. That is, it's a 1 million square feet mall, which is a Prestige Falcon City Mall in Kanakpura Road in Bangalore. Now that opens its doors to public tomorrow, and that will be the first of the new inventory that comes in. And then the next one, maybe in about a quarter, will be the Kochi Mall. And then we are planning and executing another 5 or 6 retail products. And that once the scale comes in, whether it's retail or hospitality or even office, we definitely will look at various options, whether it's again going to be a REIT or it's going to be some investor that comes in, equity investment, because we have to balance our balance sheet well. We need to see that debt doesn't go up too high, and we need to balance it with the equity.
Mentioned
So
scale.
that endeavor is there all the time, every time.
Right, so you mentioned scale a couple of times. Do you have a number in mind in terms of total amount or in volume or value terms that at that point of time you look to unlock some value, either be a strategic investor or do a REIT?
Yeah, I mean, see, if we should have a few million square feet of either office or retail or X amount of rooms for the hotels. Like I believe, again, we need to at least to have scale. At least I need a 10 million square feet of retail space or about 10 million square feet of office. And similarly for the hospitality, we are getting there. In the next 3 years, we'll have that much and much more than that. And we will be working. As of today, currently, the company is pouring concrete 70 million square feet across the country, both residential, office, retail, and hospitality. It's a humongous amount of work that is going on in different cities. And we are pretty confident and quite bullish on the real estate. And I believe that the best is yet to come.
What's the launch pipeline for the second half of the year? H1 was about 17 million square feet. Any similar number for H2?
Yes, I mean, we see for us now looking at our inventory in Bangalore, my inventory is the shelves are empty. We don't have much inventory at all. Similarly in Chennai, similarly in Hyderabad. Now it's a function of getting the approvals in place. It's all depends on how quickly the approvals come in, how quickly we get it registered and get the RERA number, and then we bring it to the market. So the teams are working strategically. And like you said, 17 million was in the first half. And we do hope to bring in 17 million plus in the second half. 1 quarter may be a little soft because the approval wouldn't have come or the RERA approval wouldn't have been in place. But then it gets made up by the following quarter. And we are on target to achieve the top line revenue that we started off in the beginning of the year.
Okay, fair enough. And no revision to that 12,000 crore number, right, for the full year?
As of now, we are looking at it, which is very sure.
Okay.
Anything over and above that, we'll be very happy.
Okay. And just one clarification that you said you should have at least 10 million square feet in any of these segments to kind of consider a REIT type structure. Is that a target you have, or is this generally a thumb rule when you consider these kind of structures, you should have some scale to put into a structure like that?
No, it's a target that we have internally.
Okay.
Nothing to do as a thumb rule, or every different fund or investor has a different way of looking at things.
Okay.
We believe until and unless we don't have that, it's not worth really going for a REIT.
All right. Across segments, right, as you said?
Yes.
All right. Fair enough. Mr. Razack, thank you very much. Great speaking with you. It's a pleasure, as always, having you with us here on CNBC-TV18 on Bazaar. We'll take a very quick break here. Up next, another interesting conversation lined up with Mr. T.T. Jagannathan of T.T.